Welcome to the lesson on business, specifically how to manage and control your wedding DJ business. And you probably already know this, but there are so many books that are written on the concept of business. There are complete genres of business books and courses that are dedicated for how to do business. And this particular lesson isn't meant to replace those or summarize all of those things. This lesson is very specific about wedding DJ businesses and some of the different moving parts. I've got 9 moving parts that we're going to go over for what a wedding DJ business looks like. But I do want you to know that there are a lot of resources out there in the topic of business and how it works. And if you are committed to being a lifelong learner, I want to encourage you to look out some of those details, look into other resources and books and just tutorials on what business is and how you can become a better business owner. I love Michael Gerber's quote that we've been talking about throughout the course, which is you don't just want to work in your business, you want to work on your business. We want to work on the entire thing as a unit and not just get stuck doing all of the technical tasks of the work itself. So I want you to ask the question, are you going to be a business owner that is a solo business owner, or are you going to be a multi-op business owner? I personally have not run a multi-op wedding DJ business, but it can be done, and there are a lot of guys that do it. And I know that you can do it if you know how to DJ weddings on your own. So the multi-op opportunity is definitely out there. I'm speaking from a solo perspective, but it's a decision that you can make. Are you going to be a solo DJ or a multi-operation DJ and have other people that work with you? And you also have to realize, are you doing this to be a business owner, or is this just a glorified hobby? A hobbyist has expensive ideas and expensive toys, and then you might make some money, but then you're just using that money to pay for more toys, and you're actually spending more money than you're ever making. And that's what a hobby looks like when you really enjoy what it is that you're doing, but you're not really making any profit at the end of the day. So if you're working tons and tons of gigs, but you're breaking even, meaning that you're just, paying for new gear with all of the money that you've made, and you've got nothing left over at the end of the day, you might have an expensive hobby, not necessarily a successful business. So what a successful business is one that creates profit, one that has money left over after you've bought the things that you need to buy to operate the business, and the assets that you need, the different pieces of equipment and cables and software that you need to run your business, that you still have some left over for yourself and for the business at the end of the day. So I've got 9 topics that we're going to go through. And one more thing before we do, in the industrial era, Seth Godin writes about this in his book, The Icarus Deception. In the industrial era, the goal was to maximize profit and to minimize expenses. Maximize profit. Let's make as much money as we possibly can. Let's figure out the fastest way to do it, the best way to do it, and then let's minimize how much it costs to actually do it so that we can make more and more money. But now that we're out of the industrial era, we're no longer there anymore. We're now in the connection economy, he says. Now that we're here, our goal is to make great art. And as a DJ, you can make great art, meaning you can be the one that goes above and beyond. I would consider the kind of wedding DJ business that we're talking about here and that we've been talking about through the course is the kind of business that Seth Godin would consider art, that we're not just doing it to maximize profitability and minimize expenses, but that we really care about the people that we're working with and that we're going above and beyond to create connection, to create value, to do something that you just can't get from anybody else. So we are definitely in the connection economy now, where what matters more than anything is how we relate and how we connect to other human beings. So just understand that even though business is this kind of technical, it's been around for a long time, and we think about capitalism and we think about profits and expenses, all of these things, we can't lose sight that the reason that we do business, the reason that we're in this game is because we're playing the infinite game. We want to stay in, and we want to connect with people. We want to have that human touch and to create memories that last, to create those wow experiences. So that's really what it's all about at the end of the day. But here are the 9 things to keep in mind. So number 1 is profit and loss. Profit and loss. Profit is the money that you make after you have covered all your expenses and you have you've gotten paid, and you've also, anything that's happened along the way, different fees, different, your gas that you've had to pay for to get to the event, any food that you had to eat because of meetings with people, things like that. At the end of the day, how much money do you have left over? So I have this little graphic here that I made, which is, just my own kind of simple graphic where we think about, in the first year of DJing, in the first year of becoming a business owner, you're really focused on assets. You're focused on getting your speakers, getting your controller, getting your microphones, getting the stuff that is going to allow you to be the best DJ possible. And then you're going to have other expenses, song requests. You're going to have, the library costs that you need to take on, your liability insurance, things like that. And maybe at the end of the day, you might have some money to pay yourself. Fun fact for you, Amazon for 9 years was not profitable, meaning Amazon wasn't making any extra money at the end of the day for about 9 years, and you can look more into that online. But when you're first starting off, your goal is to get the assets that you need, all of the different pieces of equipment, the different pieces of software, the different processes in place so that you can run a successful business. So it takes money to be able to make money, and that is what the assets is all about. It's about buying that stuff that's going to allow you to make more and more money. And then your expenses are stuff like your website, stuff like we talked about, the song cost and things like that. And then maybe you'll have some money to pay yourself at the end of the day. I've always thought of my DJ business as less about being able to pay myself and more about being able to generate enough extra side money to be able to do a fun, to be able to fuel my hobbies, basically. So I use my profit less to pay myself and more to be able to fuel my music passions and my passions for instruments and things like that. So in the second year, hopefully you're not buying as many assets anymore, and maybe your expenses go down a little bit because you don't need to buy as many songs in the second year as you may have had to in the first year. And you've got some money left over to pay yourself, and then you've got money left over for the business on top of that. And then maybe in the third year, who knows, you've got some more expenses that you're taking care of, but it doesn't matter because you've paid yourself some, and then there's still some money left over for the business at the end of the day. And maybe in your fourth and fifth year of business, you have everything that you need, so you're not making as much capital investments anymore. You're not buying brand new speakers and brand new equipment anymore. You're able to save enough money for yourself because of what you're taking in, you're not all buying it right back out again. So that's just some way to think about profit, that you want to have some left over for yourself at the end of the day. You don't want to just be paying for all your equipment and breaking even constantly. If that's the case, you probably have an expensive hobby. So a business is one that's able to generate profit. Now, a loss or a deficit is when you actually spent more money than you took in, meaning that the amount of money that you made is in the negatives. And when you go to file taxes, that is how that would come across, as a negative number of what you earned. And this is where, if you've ever heard in business, a P&L sheet, a profit and loss sheet, this is when you're looking at all the money that you brought in, all the money that went out. So that's kind of number one, profit and loss, just something for you to be aware of and something for you to think about, that if you're going to run a successful DJ business, you have to get to the place where you're generating profit, not just a bunch of loss. Number two is we're talking about costs and expenses. And we covered this a little bit in the last topic, but costs are all the things it takes to be able to make your business run. So things like song libraries, software, licenses, your website cost, things like that. And these are the things that cost money to be able to make money. And you want to track all of this stuff. So you want to be able to keep meticulous records on all of the money that you're paying out to people for in your buying for supplies. If you need, Sharpies for your for when you do weddings, and if you need a backpack for when you do a wedding, these are the supplies and these are the things that you need in order to run your business. Keep really good records of that stuff. And as always, I want to recommend and remind you to talk to a CPA, talk to somebody who is legally certified to give you advice on business and on taxes and on how to track all of this stuff. I am not a CPA, so I don't have ultimate authority on what to tell you to do, but I have worked with some CPAs and they've given me some great advice, and there are others that are out there that can do the same for you. So I encourage you to talk to a CPA about your expenses and what you're able to write off, because really that's what it comes down to. Is around tax time, you want to have a record of the things that you bought for your business so that you're able to write those off as expenses. Now, assets, things like your speakers, and there's a certain threshold of money. I think it's around $2,000, but again, consult your CPA. You can depreciate those items, meaning in the first year you get a better tax refund, and then or a better tax write-off in the first year, and then in subsequent years a little piece of that one by one is written off. So just something to think through when you are running a business, that you're tracking your expenses, you're tracking your costs. Number 3 is banking. I remember when I first started off in business, I walked into a bank and I said, "Hi, I'd like to open up a business checking account." And they were very happy to give me a very low, like a zero fee business account. And I want to advise you to do the same thing. It's very easy. You can walk right into a bank that is convenient and local for you. And in my area, I found one that has zero fees and is very kind to small business owners. So do a little bit of research. You might need to make a couple calls and see what is the best small business banking option for you. I like the experience of being able to go to an ATM, to be able to go to a branch and have a bank nearby, but there are some online only options that you can look into as well. But you want to have a separate bank account for your business needs so that you can track those expenses, and that you also have a place where your customers can write a check to that business, and then you're able to deposit it in that business name. So that's how you do that. You just go to a bank and you say, "I'd like to open up a business banking account." So that's number 3, banking. Number 4, contract and invoices. So contracts are just the documentations that allow you to make an agreement with another person. Always consider talking to a lawyer and getting a legal review to make sure that your contract is up to snuff and is approved. But your contract should say what you're doing, who you're doing it for, and what are all of the backup plans and all the different conditions that apply. What's your cancellation policy? What's your issue if there's rain? What's your issue, etc. So that is what a contract is, and you want to have one. You want to have a good contract, and you want to consult a lawyer when you think through a contract, because it needs to be specific to your area and be specific to your state and whatever laws are applicable to your particular area. You can also check out rocketlawyer.com. It is a kind of another way to consider getting a legal review from an online perspective, but you want to make sure you have a contract. And then an invoice is a similar document. I like to do both. So I have contracts and invoices. The invoice is just very simple. It just says, here's the fee for the wedding and here's when it's due by. So it's a very simple document, and I use Wave Apps for that. So it's a free program. Highly, highly recommend waveapps.com. And you can set up an account for free, completely free. And you can also accept credit cards, although there is a 1.5% fee, I think, for each transaction. So they do take a little bit of that money, or you can find a way to pass that off to the customer if you'd like. So a lot of different ways to do invoicing. There's QuickBooks, there's Quicken, there's FreshBooks, there's all different kinds of software that's out there. I highly recommend Wave Apps if you're just getting started. And to be honest, I've used this to bill out for other customers that I've worked with. Thousands and thousands of dollars through Wave Apps. So it works really well, it's reliable, it's trustworthy, and it's very professional, and it sets up email auto reminders and even tracks your expenses for you if you go in and put them in. So that is contracts and invoices. Number 5 is talking about taxes and a CPA, a certified public accountant. So they are the people that know all the rules and the regulations when it comes to taxes for your area. And you want to consult a CPA because they study this stuff. They know it inside and out. They're able to figure out, are you able to write off the music? Are you able to write off your suit coat? Are you able to write off whatever? And they know the laws, they know what is shady and what is not, and they're able to make sure that you err on the side of safety and that you do a good job making sure that your taxes are filed correctly. It is sometimes expensive to talk to a CPA and to set up that meeting, but it might be worth it. And you may also consider who in your network may be able to give you some advice or a cup of coffee. Maybe you can pay them a little side fee to be able to ask them some questions as you're setting up your business and making sure that you have everything in order. But taxes, you're going to have to file every year. And again, I'm not qualified to give you the end-all be-all advice, but one of the things that I do is I save about 30% of everything that I make specifically for taxes, and I've set up quarterly estimates, and that scared the crap out of me when I first got started. I was like, quarterly estimates, what does that even mean? If you're in your first year of operation, you probably don't have to worry too much about it, but basically you want to save some money off to the side, and in your second year and third year of business, you want to pay the IRS a little bit of money so that at the end of the year, you're not owing them a big chunk of change. So basically, it's a way of being proactive, like we talked about in our commitment lesson, and planning ahead of time to make sure that you are paying taxes on all of that income. If you have a W-2 or if you've ever worked for an employer, they are paying taxes for you as you go. So it's about, I can't remember what the percentage is, but they are already figuring out how much taxes they owe and how much taxes you owe as the year goes on, and that's sometimes taken out of your paycheck before it ever even gets to your bank account. It's different when you work with people one-on-one. When you're in the freelance world, when you're in the business world, you have to figure that stuff out yourself. It seems like it's scary. To be honest, it's not, and it's nothing for you to be worried about other than save some money for taxes. And I do about 30% off to the side. So 30% of everything I earn, I make sure I kind of put off to the side and make sure that I have that available for quarterly estimates. So 4 times a year, I make sure that I pay at irs.gov through direct pay, and then I just know that that's coming up. I know that that's a part of doing business, and that way when I file taxes in March or April, it's going to depend on whether you have an LLC or a sole proprietor. These are the things that you want to talk about with a CPA. And they're going to be able to give you very clear instructions on what you need to do in your first year of operation, what you need to do in your second. I'll give you a preview of what they're going to say. They want to know how much money did you make and how much money did you spend, and do you have records for everything that you spent? Do you have a receipt for every, if you're going to write off gas, you have to have the locations of where you traveled and the fuel charge for that if you want to be able to write that off. If you don't have the records, you can't write it off. Otherwise, if you were to get audited, they're going to ask, hey, where's your record of this? So there's a lot of ways to make sure that you are doing everything by the book. A CPA is going to be able to tell you that in a lot more detail. But here it is again, simplified. How much did you make? How much money did you make in terms of income? And then how much money did you spend in terms of expenses and things for your business? They might talk about depreciation, taking your big purchases and writing those off over a series of years and stuff like that. So taxes, it's not as scary as it seems. It's just all about how much money did you make and how much money did you spend, and can you write that off in a way that is appropriate for you? So I finally set mine up as an LLC, which has a little bit of a different parameters for myself and the state, but you may want to consider being a sole proprietor. You may want to consider being something else, and the best person to talk to about that is somebody who's qualified, like a CPA. And trust me, like I said, it's not as scary as it seems, but it is something that you need to consider as a business owner, is how you're going to handle that. Number 6 is mailing. So I set up a PO box for myself because I didn't want all of the clients that I was working with to have my home address. It's okay if you do. It's up totally on your radar. But I wanted to be able to have a physical place where people could send me information, contracts, money, etc., without having to put my main address out there. So I got a PO box. There's other places that offer mailing boxes, like the UPS store and other postal businesses will often have mailboxes that you can rent for a monthly fee or a yearly fee, and then you can have mail sent to that place. So mailing is important, even though we're in an age where there's more and more digital stuff. Every now and then, it's nice to be able to write down a physical address that is not your home address, which helps with security, helps with some privacy. So something to think about there. Number 7 is insurance. Liability insurance is really important as a wedding DJ. You want to have liability insurance because it protects your equipment, it protects you, and if something happens to the venue, if something happens for any reason, you have a fail-safe there. So I use the DJ Insurance in Minutes, which you can look up. It's been very reliable, and I'm friends with one of the guys that works there on Facebook, so he's been able to answer a lot of my questions when it comes to that. They have a really good support team and they work with a lot of DJs, so that's who I have used. But you can ask other insurance companies, do you offer liability insurance for DJs? Not many companies do, so you can look into some other options that are out there. I highly recommend the DJ Insurance in Minutes company through, I think, RV Nuco is the provider there, and I have had zero issues. They're able to generate an articles, I think it's called an additional insured document. So sometimes a venue will say, can you please provide documentation of your liability insurance? And what that means is you have to go in and add that particular venue, their address, their name as an additional insured under your insurance account. And with the company that I mentioned, it's very easy to do that, very user-friendly, and you're able to send over that document no problem. When I was working with a lot of schools, they wanted to have the additional insured documentation. So insurance is important, and that's an expense that you can also factor in to your business. Number 8 is payments. So be thinking about how people are going to pay you. I have done all of my business only by check, and I do that because it's easy to track. It's easy to make sure that I kind of like doing the deposit. I like going and getting the check from my P.O. box and doing it that way. But you can also accept payments via credit card online. You can also accept payments via cash or through other methods like PayPal and Stripe or even Venmo. There's the ability to be able to take payments that way. So think about how you want to take your payments and make that clear to your customers. So I make it very clear that check is the only way that I take payment, and I haven't had an issue yet. So that is number 8, payments. And then number 9 is this whole LLC, sole proprietor business. Again, the best person to talk to about that is a CPA, and to look into your particular state and what benefits might be included for being one of those. So don't get too scared about these terms. If it's the first time that you're hearing them, a simple Google search will give you some more information about, insurance and contracts and banking and profit and loss and those kinds of things. But at the end of the day, I just want you to think about business is way more than just this stuff. Business is really about connecting with people and going above and beyond. And that's why we do all of these other things. We have to keep track of what we spend. We have to keep track of the money that we're making, and we have to pay our taxes and be a good citizen. This stuff isn't to be avoided, and it's not meant to just be brushed off as not important. It can be kind of fun doing this stuff. And realize that you've got somebody like me who is here if you've got questions. And there are people in your community, there's people that are out there that specialize in each of these areas that can help you to grow. But as you think about being a business owner, again, you just want to think, are you in this to just have some extra money for some hobbies? Or are you in this because you do want to grow the business itself and bring on more people and make more and more profit? Knowing what your business goals are going to allow you to figure out what you want to charge, figure out the best way to take payments, figure out what expenses might be eating up some of that profit. So these are all the things to think through. I've got some other resources that you can listen to on business as well. But thank you so much for listening to this course. If you've got questions, as always, please get in touch with me, and I will see you in the next lesson.